Saseni, I hope kila mtu anaendelea poa. This is E.N.MACHARIA na karibuni sana in this channel. Siku ya leo nimemtayarishia kitu mzuri and I hope kila mmoja wenu amesikia kuhusu hii Finance Bill 2024. So hii Finance Bill ni proposals zenye serikali imekuja nazo za kugenerate revenue for the financial year 2024-2025. So bado ijakuja kwa public participation. I hope pia nyinyi mtatoa maoni yenu. So ndio nataka tuguzie siku ya leo. So welcome all. Tuendelee kusaidika pamoja. Do you know what is a finance bill, by the way? So a finance bill is a document that is prepared by a government for it to generate revenue for its day-to-day activities. So hizi ni proposals za mahali ambapo serikali inaangalia, inaona ni kama inaweza pata pesa kupitia taxes, kwa sababu hakuna mahali pengine government hutoa pesa. It's only from taxes and maybe grants ama misaada kutoka nje or loans, but for self-sustaining government lazima generate revenue. So about this Finance Bill 2024, iko na some proposals zenye zita to affect directly or indirectly. So nimejaribu ku highlight zile ambazo zinaweza kutu affect directly, and I hope pia wewe utaitafuta, we go through deep ndio uelewe ni nini tunaongelea kuhusu. So about this finance bill, tutaanza kwanza na proposals za Income Tax Act. So wame categorize in different tax obligations. So kwanza tutaanzia na Income Tax Act. So what are they proposing on income tax? One, they are proposing to introduce a motor vehicle tax. So the bill proposes to introduce a tax known as a motor vehicle tax at a rate of 2.5% of the value of the motor vehicle. How will the motor vehicle value be determined? The value will be determined on the basis of make, muundo wa gari, model, engine capacity in cubic centimeter and year of manufacture of the motor vehicle. So hizo ndizo determinants the value of the motor vehicle. So this tax will be payable on each motor vehicle at the time of insurance cover. So ukienda pale ku apply insurance utakuwa unailipia 2.5%. The bill proposes to cap the minimum tax payable to 5,000 shillings and a minimum of 100,000 shillings. So the little you can pay is 5,000 and the maximum that you can pay is 100,000. So huwezi lipa more than 100,000. That's what they are proposing. The bill proposes that the insurer of the motor vehicle shall collect and remit motor vehicle tax within 5 working days after insuring a motor vehicle with insurance cover. So ukiapply na umelipa, after 5 days the insurance company inalipa the tax. So if the insurer fails to collect and remit motor vehicle tax, they shall be liable to pay a penalty equivalent to 50% of the uncollected tax, and the actual amount of the uncorrected tax. So kama walikuwa walipe 50,000, watapigwa penalty ya 50% which is 25,000 plus the 50,000, so they will pay 75,000. Motor vehicle tax will not be payable in respect of ambulances, so there are those exempted motor vehicles, e.g. ambulances, motor vehicle owned by national government, county government, Kenya Defence Forces, National Police Service, National Intelligence Service, or persons exempt from tax under the Privileges and Immunities Act. So hizo ndizo hazitakuwa zinalipiwa, but any other motor vehicle itakuwa inalipiwa hii proposed 2% motor vehicle tax. So about thoughts about this, ita affect sana watu wengi kwa sababu hata matatus, so wale wanatumia PSVs pia hizo zitakuwa affected, so maybe hata fare inaweza ongezewa, yeah. So to maintain the motor vehicle, it's very high, so it's not a very good proposal, but we shall see what they will do with it. Proposal number 2, withholding tax on goods supplied to public entities. So under this, the bill proposes to introduce withholding tax on goods supplied to public entities by both resident person and non-resident persons without a permanent resident. The applicable withholding tax rate shall be 3% of the amount paid if the payment is to a resident person, and 5% if the payment is to the non-resident person. So this proposal is for withholding taxes on goods supplied to the public entities. And what is this public entity? A public entity is defined to mean a ministry. So kama una supply good to ministry, state departments, state corporations, county department, or agency of the national or county government, utakuwa una withholdiwa 3 or 5% respectively. So for non-residents, those are people who are not living in Kenya or are not Kenyan citizens, the tax is final. So ukilipia hii 5%, the tax is final. But for the resident, the tax is not final. So proposal 3, requirements to deduct withholding tax regardless of the amount. So kitambo kulikuwa na cap, or currently there is a cap ya 24,000 per month. So kama amount yako iko less than 24,000, you are not supposed to be withheld. But they are proposing for any amount, even a shilling, will be withheld. So that's another proposal they are proposing. Another proposal, increase of non-taxable benefits of employment. So increase of non-taxable benefits of employment. So under this, amend the non-taxable daily limit of an allowance paid to the employee working outside his usual place of work. The bill proposes that employers should have a policy on the payment and accounting for subsistence, traveling, and entertainment or other allowances with an amount not exceeding 5% of the monthly gross earnings of the employee. The current non-taxable daily limit of the allowance is capped at 2,000 shillings. So wanataka kuichange from 2,000 shillings per month to 5% of the monthly gross earnings. So kama unawana 100,000, 5% of 100,000, which is 5,000. So under that, amend the limit of non-taxable benefits granted with respect to the employment from 60,000 shillings to 48,000 shillings, and review the value of meals provided to the employees in a canteen or cafeteria operated or established by an employer from 48,000 shillings to 60,000 shillings. So pia hiyo wanataka kuangalia. Another proposal, amounts paid or granted to public officers to reimburse them for expenses incurred during performance of official duties shall not constitute taxable gain or profit. So this one niliona ikiwa discriminatory kwa sababu why only public officers? It should be to all Kenyan citizens, not public officers alone. And this proposal was also proposed in the Finance Act 2023 but was not passed. So hata saa hii ni vizuri pia waiangalie, not only for public officers but also to the general public. So the bill proposes to introduce a new provision that any amount paid or granted to a public officer to reimburse them for an expenditure incurred for the purpose of performing official duties, notwithstanding the ownership or control of any asset purchased, is not a gain or profit for purposes of income from employment. They will apply even where the purchased assets are personally owned by public officers, provided that the assets are for official use. So for this, mimi ningepropose pia wa include the general public. So another proposal, increase in the limit of tax deductible pension contribution made to registered funds. Pia hiyo wana propose kubadilisha, and the bill proposes to increase the limit of tax deductible contribution made by employees to registered pension scheme and provide funds from Kenyan shillings 20,000 a month to Kenya shillings 30,000 a month. The ability to deduct such contribution in the computation of taxable income makes pension contribution tax free. So at least hii ni mzuri, inafanya contribution ikuwe tax free. Therefore, going forward, the tax exempt contribution made by an employee shall be the lesser of 1. The sum of contribution made by an employee to the registered fund, so hiyo itakuwa exempted. 2. 30% of the employee's pensionable income in the year. 3. 360,000 in a year or 30,000 shillings a month, or any amount by which an employee's pension contribution exceeds the above criteria shall not be deductible in computing the employee's taxable income, and therefore shall be subjected to income tax. In addition, where the sum of both an employee and employer's contribution exceeds Kenya shillings 30,000 in a month, the entire employer's contribution shall be non-deductible in computing the employer's income tax liability. So, another proposal, increase in limit of tax deductible contribution made persons who are not members of a registered fund or public pension scheme. Increase in limit of tax deductible contribution made persons who are not members of a registered fund or public pension scheme. The bill seeks to increase the limit of tax deductible contribution made to individuals who are not members of a registered fund or a public pension scheme from Kenya shillings 20,000 a month to Kenya shillings 30,000 a month. The ability to deduct such contribution in in computation of taxable income makes the pension contribution tax free. Pia hiyo ni kama ile ingine, ni mzuri sana. So therefore, going forward, the tax exempt contribution made by an individual will be lesser of the sum of contribution made by the individual or by the employer in the year. 2. 30% of the individual's pensionable income in the year. And 3. 360,000 in a year, or 30,000 shillings in a month, reduced by an amount paid by the individual or by an employer on his behalf. So another proposal, taxation of income from operation of digital marketplace or platform and digital content monetization. So the bill proposes to tax the income of a resident or non-resident person who owns or operates a digital market or platform. So hawa ni kama sisi online wenye wako na YouTube channels etc. So or facilities payment in respect of digital content monetization, goods, property, or services. The tax will apply at the rate of 20% for non-resident and 5% for resident. So this tax of income for operation of digital marketplace or platform and digital content monetization, they are proposing it at 20% for non-resident and 5% for resident. Another proposal, repeal of provisions on digital service tax and introduction of significant economic presence tax. So the bill proposes to repeal the provision on digital service tax and introduce a tax known as significant economic presence tax at the rate of 30% of the deemed taxable profit. The tax will be payable at a non-resident person whose income from the provision of services is derived from or accrued in Kenya through a business carried on over a digital marketplace. So these two are related. Tumeangalia hapo mbele na hii, they are almost related. So these are taxes that are going to be introduced. So kama wewe ni mmoja wa wale watu wako wanafanya biashara online, these two are yours. Do your research, jua zinasema kuhusu nini. So another proposal, minimum top-up tax on certain resident entities that are a member of multinational group. So under this, the bill seeks to introduce a minimum top-up tax which will be payable by a covered person where the combined effective tax rate in respect of the person for a year of income is less than 15%. A covered person is defined as a resident person with a permanent establishment in Kenya who is a member of a multinational group with a consolidated turnover of 750 million euros or more in the consolidated financial statements of the ultimate parent entity in at least 2 of the 4 years of income immediately preceding the tested year of income. So the following shall be exempted from minimum top-up tax. 1. A public entity not engaged in business. 2. A person whose income is exempt from tax under paragraph 10 of the first schedule. 3. A pension fund and its assets. 4. A real estate investment vehicle that is an ultimate parent entity. 5. An operating investment holding company. 6. An investment fund that is an ultimate parent entity. 6. A sovereign wealth fund. And 7. An intergovernmental organization including wholly owned agency or organ of the intergovernmental organization. So those will be exempted. So net income or ROS means the sum net income or ROS for the year of income after deducting the sum of the losses of a covered person as determined under recognized accounting standards in Kenya. Excess profit means the net income or loss of a covered person for the year of income, less 10% for the employee's cost, 8% for the net book value of tangible asset. So another proposal, investment allowance deduction on Spectrum license. The bill proposes to allow an investment deduction claim on capital expenditure incurred on the purchase of Spectrum's license by a telecommunication operator at the rate of 10% per year in equal installments. For Spectrum's license purchased before 1st January 2024, the deduction shall be restricted to the unauthorized portion over the remaining useful life of the Spectrum license. So another proposal, contributions made to the Social Health Insurance Fund, post-retirement medical fund, and the affordable housing levy deductible for tax purposes. So the bill proposes under this to include the following as allowable expenses in determining the taxable income of a person. 1. Contribution made to the Social Health Insurance Fund by every Kenyan household and a non-Kenyan resident originally residing in Kenya for a period exceeding 12 months. 2. In the case of an employee, the amount deducted by the employer in accordance with the Affordable Housing Act 2024. 3. Contribution to post-retirement medical funds subject to a limit of 10,000 shillings per month. So those will be used to determine the personal or taxable income of a person. So contribution for Social Health Insurance Fund, that is SHIF yenye imebadilishwa ilikuwa NHIF, post-retirement medical fund, and affordable housing levy deductible for tax purposes. So another proposal, interest income earned by resident person from infrastructure bonds to be taxable. So interest income earned by resident person from infrastructure bonds to be taxable. The bill proposes to subject to income tax the interest income earned by resident person from an infrastructure bond. Another proposal, taxation of family trust. The bill proposes to subject the income of a registered family trust to tax. So another proposal, repeal of the relief on contribution made to the National Health Insurance Fund, post-retirement medical fund, and affordable housing fund. So hii ingekuwa mzuri sana kama wangeretain, wasiondoe venye wanasema wataiondoa. The bill proposes to repeal the relief which is available where an individual pays premium for a medical insurance policy or towards National Health Insurance Fund or towards post-retirement medical fund. The relief is currently set at 15% of the amount of premium paid, but subject to a limit of Kenya shillings to 60,000. So the bill proposes to repeal the affordable housing relief applicable to a person saving for the purchase of a house under an approved affordable housing scheme. The relief is currently set at 15% of the employee's contribution, but not exceeding Kenya shillings 108,000 per annum. It is not worth that this relief is different from the relief available for deductions pursuant to the Affordable Housing Levy Act. So wanajaribu kupropose waitoe. Another proposal, automatic approval of change in the accounting date following lapse of 6 months. So this mostly is for those people doing businesses, for audit purposes, for filing returns, for filing taxes. The bill proposes that an application for the change in the date to which a taxpayer makes up its account shall be deemed to be approved if no response is received from the KRA after the lapse of 6 months from the date of application for change. So this one is for those people who are doing businesses, ama wanafile returns, etc. Last proposal on Income Tax Act, repeal of the penalty on underpayment of installment tax. Under this, the bill proposes to repeal the provision that provides for the imposition of a penalty of 20% where a taxpayer has underpaid installment tax. So pia hii bado ni ya wale watu wanafanya income tax at the end of the year. Some of them hulipa installment tax. So the bill proposes to repeal the provision that provides for the imposition of a penalty of 20% where a taxpayer has underpaid installment tax. So hii ni mzuri. This is a positive move and intends to align with penalties as contained in the Tax Procedures Act. So hii ni mzuri sana. So kama umechelewa kulipa ama umelipa less, watagoja mpaka mwisho wa mwaka utalipa the balance. So now part 2 on the VAT or Value Added Tax Act. So under this wako na proposals and some of them nimejaribu kuangalia kwa sababu most of the people wako under this Value Added Tax. So under this wameanza na first proposal, definition of tax invoice to include an electronic tax invoice. So this one is for E.Teams software. So kama wewe ni mwanabiashara na uko pale uja register ama ujajiunga na E.Teams, make sure you do so. The bill proposes to introduce a definition of tax invoice to include an electronic tax invoice issued in accordance with section 23A of the Tax Procedures Act. The requirement of the businesses to issue an electronic tax invoice was introduced by the Finance Act 2023 and was effective on 1st September 2023. So kama wewe ni mwanabiashara na upeane invoices that are generated from the E.Teams, make sure you on board on E.Teams for purposes of taxation. 2. Second proposal, change in relation to claim of VAT refunds. So kama uko na refund, wana propose, the bill proposes as follows for change to the VAT refund regime. 1. Excess input tax arising from withholding VAT to be paid to taxpayers like that arising from zero rating as opposed to refund or set off per section 47(4) of the Tax Procedures Act. 2. Deletion of the requirement to lodge claims for refund of the excess tax within 24 months from the date the tax becomes due and payable. 3. Deletion of the provision on claim of refund of excess input tax by manufacturers due to supplies made to an official aid-funded project approved by the Cabinet Secretary responsible for matters finance. 4. Deletion of the provision on entitlement to full input VAT credit where the input tax attributable to taxable supplies is more than 90% and the disallowing of the full input VAT credit where the input tax attributable to taxable supply is less than 10%. Another proposal, application of VAT on certain financial services. So hii si mzuri, wanataka kuongezea VAT. The bill proposes to delete VAT exemption for the following financial services, which would subsequently be chargeable to VAT at the standard rate currently at at 16%. So, 1, issuing of credit and debit notes. So hiyo itakuwa sasa venye wana propose itakuwa charged VAT. Telegraphic money transfer service, foreign exchange transactions including the supply of foreign drafts and international money orders. 4, check handling, processing, clearing and settlement including special clearance or cancellation of checks. Pia hizo hazikuwa na VAT, zilikuwa na excess duty, wanataka kuintroduce VAT. Issuance of security for money including bills of exchange, promissory notes, money and proposal orders. 5 or 6, the assignment of a debt for consideration. 7, the provision of financial service on behalf of another on a commission basis. So hizo zote wanataka kuintroduce VAT. Increase of VAT registration threshold, pia hii wanataka kuintroduce. So the bill proposes to increase the threshold for mandatory VAT registration from Kenya shillings 5 million to 8 million. So currently iko 5 million, but wanataka kuipropose to 8 million. Another proposal, clarification of VAT exempt on locally manufactured passenger motor vehicles. So hii ni mzuri, at least itashukisha the cost of motor vehicles manufactured in Kenya. Another proposal, removal of VAT exemptions for the manufacturers and constructions sector. So wakiremove hii exemptions, hii ita affect sana. Another proposal, exemption of transfer of businesses as a going concern from VAT. So under this, the bill proposes to make the transfer of businesses as a going concern exempt from VAT. So hiyo ni mzuri. Currently VAT is applicable on such transfer at the salary rate of 16%. So wakiitoa at least itakuwa mzuri. Exemption of insurance and reinsurance premiums from VAT. Pia hii itakuwa mzuri. The bill proposes to limit the VAT exemptions on insurance and insurance services to insurance and reinsurance premiums. As such, the rest of insurance and reinsurance services would be subjected to VAT at the salary rate currently 16%. Another proposal, application of VAT on betting, gaming and lottery services. So hii itagusia watu wengi, the gabras. Tafuteni hii pate hata nyinyi mpeleke maoni yenu. So the bill proposes to delete the VAT exemption from betting, gaming and lottery services. These services would be subject to VAT at the standard rate currently at 16%. So kitambo ilikuwa tu withholding taxes, but wanataka sahi kuintroduce VAT at 16%. Another proposal, standard rating of local assembled and manufactured mobile phones. So under this, the bill proposes to standardize rates the supply of locally assembled or manufactured phones. So hii pia ni mzuri, wakistandardize at least itakuwa sawa. So removal of VAT exemption granted to persons that had an agreement with the government. So hii ni mzuri kwa sababu inafaa kuwa to all Kenya, not those people who have agreed with the government. So the bill proposes to delete the VAT exemption for taxable goods supplied to persons that had an agreement or contract with the government prior to 25th April 2020, and the agreement or contract provided for exemption from value added tax. So another proposal, removal of zero rated status for e-mobility sector goods. So which are these goods? The bill proposes that the following items which had been zero-rated for VAT purposes would be subject to VAT at the standard rate, currently 16%. So it affects 1, the supply of electronic motorcycle or bicycles. So piki zenye zinakuja sahi electronically zitakuwa VATed or VATable. The supply of solar and lithium ion batteries. The supply of electric buses of tariff headings 87.02. So pia hizo zitakuwa VATed. Kitambo zilikuwa exempted but they are proposing zikuwe VATable. So pia hiyo ita affect sana kwanza the youth kwa sababu ya hii ya electric bicycles. So another proposal, scrapping of certain VAT exemptions in the tourism sector. So kuna hizi sectors za tourism zilikuwa exempted but sasa wanataka kuziondolea hiyo exemption, they should be taxable. So one of these, taxable goods for direct and exclusive use for the construction of tourism facilities, recreational parks of 50 acres or more, convention and conference facilities upon recommendation by the cabinet secretary responsible for matters relating to recreational parks. 2. Special designed locally assembled motor vehicles for transportation of tourism zitakuwa taxable, purchased before clearance through customs by tourism operators upon recommendation by the competent authority responsible for tourism promotions. And 3. Taxable services for direct and exclusive use for the construction of tourism facilities, recreational parks of 50 acres or more, and convention and conference facilities upon recommendation by the cabinet secretary responsible for matters relating to recreational parks. Another proposal, scrapping of certain VAT exemption in manufacturing and construction sector. So wale wako manufacturing and construction sectors, kindly hiyo party ni yenu, iangalieni ndio mpeleke maoni yenu, malalamishi yenu. Kama itakuwa mzuri kwenu, well and good. Kama si mzuri pia ni vizuri mpeleke, kwa sababu there are those zenye zilikuwa exempted but now wanataka kuziwekea VAT at the rate of 16%. So pia hiyo ita affect watu wengi in one way or another, kwa sababu manufacturing and construction sectors zimebeba watu wengi. So tumemaliza proposals za VAT. Sasa ni the third category, which is excise duty. So under excise duty wame propose introduction of excise duty on internet and social media advertisement of specific products and services. So wanataka kuintroduce excise duty on advertisement on social media and internet. So under this, the bill proposes to introduce excise duty at 15% on fees charged for internet and social media. So wata introduce 15% fee charged on internet and social media. And social media advertisements relating to alcoholic beverages. So pombe kama una advertise watakuwekea 15% excise duty. Bettings kama una advertise betting, gambling, 15%. Gaming, lotteries and prize competition, hizo ndizo zinawekewa 15% excise duty. That is in matters digital or social media advertisement. Another proposal on excise duty, introduction of excise duty on services offered in Kenya by an non-resident through a digital platform. So under this, the bill proposes to introduce excise duty on excisable services offered in Kenya by a non-resident through a digital platform. The proposed excise duty rate is 20% and would apply to the following services. 1. Telephone and internet data service. Fees charged for money transfer services by banks, money transfer agencies, and other financial service providers. 3. Betting, lottery, gaming, and prize competition. And lastly, fees on digital rendering. Another proposal, increase of excise duty on money transfer service. So under this itaguzia watu wengi sana, kwa sababu hii ni ile ya M-Pesa, bank transfer, phone or mobile transfers. The bill proposes to increase excise duty from 15% to 20% on fees charged for money transfer services offered by 1. Banks, money transfer agencies, and other financial service providers. 2. Cellular phone services providers or payment service providers licensed under the National Payment System Act 2011. So hizo zitaguzia watu wengi sana, kwa sababu watu wengi wanafanya transfers, M-Pesa's transaction fees, charges zitakuwa juu, etc. So ni mzuri pia upeleke maoni yako. Kama inakufurahisha sawa, kama ikufurahishi, propose what they should do. Another proposal, deletion of excise duty relief for raw materials and resale of internet data. So pia hii ita affect watu wengi wenye wanafanya kazi online. The bill proposes to delete the excise duty relief for raw materials, which provide that any excise duty paid on excisable goods that have been used as raw materials in manufacture of other excisable goods is to be used to offset the excise duty payable on the finished goods. 2. Persons that purchase internet data in bulk for resale, which provides that such person is liable to offset the duty paid on purchasing against the excise duty payable by the person on internet data service supplied to the final customer. Another proposal, removal and introduction of excise duty on specific products. Which are these specific products? Fika pale wako na very long schedule pale wameweka, angalia uone ni gani hizo. Another proposal, extension of timeline for payment of excise duty by licensed manufacturer of alcoholic beverage. So extension of timeline of payment of excise duty by licensed manufacturer of alcoholic beverage. Pia hiyo fika hapo uangalie, sababu ana propose, the bill proposes to extend the timeline for payment of excise duty by licensed manufacturer of alcoholic beverages to 5 years working days upon removal of goods from the stock room. The Finance Bill 2023 required licensed manufacturers of alcoholic beverage to pay excise duty within 24 hours upon removal of the goods from the stock room. Lastly, KRA required to consider an application for licenses within 14 days of application. The bill proposes to introduce a 14-day timeline for the KRA to respond to an application for a license under the Excise Duty Act. So all those are the proposals, but there is the Tax Procedure Act. So go through those, tafuta the finance bill, na kama unahitaji niko na document I can share with you. Comment hapo chini, share to as many people as possible, ndio pia wao wasipitwe, watoe maoni yao, so that everybody will be carried along. So, and for that, have a nice time. Let's meet again some other time. Thank you very much.